There has been a lot of backlash and frustration towards health insurance these days, not just stemming from the very unfortunate shooting that happened in New York City, but it's been going on for many years now. As a certified actuary, I want to offer my perspective on why healthcare financing is so difficult in the US system, which is funny because whenever I used to explain what I do, by the third sentence, people will fall asleep. But I think now it is important to talk about this because medical inflation is impacting everyone, and price transparency is a real issue. And the cost and complexity associated with the whole system has been just creating so much tension and controversy. And perhaps the biggest controversy I'm hearing online is around incentive. Are for-profit insurance company or similarly for-profit hospitals inherently bad and conflicting with optimizing healthcare services for the general population? So we all know how insurance works. Let's just say that a person doesn't have any insurance. To prepare for times when they may need care services, which is inevitable, they would need to save consistently over time. An insurance entity is really just collecting and spreading out that risk through a bigger pool of savings, covering many, many more people. And the larger the risk pool is, the more power it has to cover individual adverse events. In the US, the unit of risk pooling can be under the following common scenarios. So you have large group employers. We're talking about companies that have over 50, 100, and even more people. And when a company gets very large, they tend to opt for just being self-insured. So at that point, it's really the company that's carrying all the liabilities, and the private insurance company is really just administering the plan and provider network and benefit in the back end. And then we have the risk pool for small companies that are typically joined together in the same risk pool and standard plan design. And then we have the individual market, which include individual health exchange for anyone that wants to opt in or unemployed. And then there is the Medicare market for age above 65 and individuals with disability. And then there is the federal and state-sponsored Medicaid, which is for low-income individuals. And the small group market and individual market, these two are heavily subsidized by government funding, by tax revenue. So employer sponsorship, as well as the overall risk profile of a company employees, can have a pretty big impact on how benefit is perceived at individual level. And speaking from a personal example, years and years ago, I used to work at a big company that's covered by, let's say, insurance company A. And the demographic of my old employer, let's just say they're way more young people, like the average age is younger, and the utilization of the benefit is fairly low. And people don't tend to stay at the company for very long. The average tenure is low as well. So the benefit design for that company is actually made it really affordable for the employees. Not only did I pay zero premium, almost any care is covered 100%, even some elective procedures. I mean, that is a result of how much the company was willing to invest and subsidize for employee benefit as a whole, and how much the risk profile just balanced out from a premium versus claims payout perspective. And later I switched to a different company 2, which has its benefit administered through the exact same insurance carrier. And this time the demographic of my current company is a lot similar to the US average, and people tend to stay longer. And here my premium just went up a lot, and my network option was a lot narrower, and I have to pay more out of pocket, and I get more claims denied. So this is something that's just very unique to the US market, that employers play a very big role in the coverage of employees. When it comes to healthcare financing, another important factor is minimum loss ratio. It is mandated by Affordable Care Act that for large group, at least 85% of the premium revenue must be used to pay out claims. And that ratio is 80% for small group and individual market. If there is a difference, then it must be returned to members in the form of either rebate or premium reduction. The other 15% includes admin cost and then 3 to 5% profit margin on average, which doesn't seem like a lot. But of course, if we consider the market cap and underlying covered population, it does amount to a pretty big dollar value. I think there can be a misconception that the more private insurance companies squeeze out of the claims payment, the more it gets profit, which that's not exactly how it works, because technically the less claims you pay out, it means that the premium will need to go down, so the whole pie shrinks, so the profit actually becomes smaller. The real benefit or the real reason for managing care and claim denial is really to control the premium affordability and maintain a very competitive pricing. And in fact, from my experience working in this industry, a lot of large companies, when they go into a new market, are willing to go insolvent just to have that competitive pricing, to get the market share and customer base, and then later on try to figure out a way to break even. It's easier for larger business to do that because of the capital power and the fact that they can use other business to subsidize. And the benefit for having a bigger customer base is such that you can then negotiate with the provider side, hospitals and pharma, for a lower rate on service and pricing. This is also the reason why, in my opinion, it is very hard for a startup to compete in this space, because economies of scale really matter here. For any incumbent to do well in this space, you'd have to be so exceptionally efficient at managing and optimizing care delivery across the board while offering very competitive pricing with very large network, which almost always is going to need pretty high level of subsidization and funding to allow the company to stay afloat while the business itself may be unprofitable for many years in the beginning. There are probably different ways market and regulation can encourage more innovation and competition. An alternative direction would be to go towards a single payer system, in which case the government hires only one entity or becoming the one organization that negotiates all the rates with all hospitals and drug companies. And I would say that even if we go to a single payer system, claim denial will still happen, and not just because overtreatment and overtesting happens all the time, but also just the general high charges from the hospital side, particularly in the US. And that's not always a bad thing, because the medical field needs to advance in its technology, research development, and hiring the best doctors, and for them to be compensated well. Ultimately, regardless of which system we go to, what really matters is to reduce the per capita health service cost. If we look at the US medical care service inflation, it is so much higher than general CPI. Kaiser Family Foundation has an article that breaks down the per capita cost component. And if we look at the comparison between United States and comparable country average, inpatient and outpatient care is over more than twice as high. Prescription drugs and medical goods, almost twice as high. And then administrative costs, also a lot higher. And by the way, administrative cost is a space where I think the advancement of AI and the large language model can really help, because let's be honest, the tech stack used by healthcare system is pretty outdated. And zooming back out to look at the whole picture, it is a bit unfortunate that we seem to be in the situation where hospitals and insurance sides are constantly going against each other. One is trying to provide more services, one is trying to control cost. The ideal model is that all three parties, I'm talking about providers, payers, and patients, all three have a common goal of taking care of individual health from a long-term preventative perspective. And I've seen the market trying to move towards value-based care. It just takes a very long time to get there. But I do think that if we solve the incentive we will get so much closer to achieving the outcome we need. I hope that's helpful. So this is really just scratching the surface, as there are a lot more nuances getting into the details of the macroeconomics and policy impacts and many other factors that I haven't covered. Let me know if you have thoughts on what would be a good solution to the system. Always really curious to hear everyone's perspective. Thanks again for watching, and see you next time.